Hey traders, it's Danielle. Welcome to today's Tuesday trade example. Now, today I wanted to do a special video. Normally I do winning trades, and the reason why I do that is because the only way that you're ever going to figure out, how to be consistently profitable is by studying your winners. You have to go back, you have to look at the confluence that you see, you have to figure out what you did right, what you could have done better, and more importantly, how to do it again. But in today's example, I am going to be going over my worst trade of 2021. So, it all started with a little something called GameStop. Now, I'm sure everybody knows what happened with GameStop, but just to do a quick recap for those of you who are unaware, basically you had a stock with incredibly high short interest, and then all of a sudden a bunch of buyers started coming in, and when that happened it pushed the price up. Well, as price continued to be pushed higher, that meant that the short sellers had to get out. Okay, so when you had the buyers coming in, mostly retail buyers, and then you had the short sellers who were buying to cover getting out, what you had is an explosion in price. Now, when this whole thing was going on, it was a little humorous to me because, well, I trade the short squeeze and I trade it all the time. Last year, the majority of my profits, I would say, came from the short squeeze. I traded Chewy, multiple times over the course of the years. A lot of different trades, a lot of different moves, but definitely my biggest ticker on the year. I also traded Peloton quite a bit. That was going to be my second biggest winner. You had a really big short squeeze move right here, right here, right here. Then, of course, Tesla. That was just absolutely massive. Made for some really great trades over the course of last year, which would have been 2020. Then there's also space. So Virgin Galactic Holdings, this one has also been squeezing out the short sellers. A couple different spots. You had a short squeeze right here, right here, right here. They tried right there, and definitely you have a short squeeze that's ongoing. So anyways, when GameStop arrived, initially I looked at it and I said, man, this is crazy. You just have these Reddit people piling into this, and it's way too volatile and I don't want to touch it. But then, of course, the FOMO ramped up. The FOMO is probably one of the most dangerous emotions in trading. This is called the fear of missing out. Now, right around this time, right around when the short squeeze was really setting up, just happened to be the exact moment I got very sick with COVID. So I spent that next week laid up in bed reading the Wall Street Bets channel, sending out a bunch of tweets. That was all I really had the energy for, but I did not trade this move. And looking at it as someone who wasn't trading it, it was just so obvious to me what happened. And it's always obvious when you're not in the move because you're not involved and you don't have any emotion in the game. But when I was looking at GameStop, I said, oh man, you've got these green candles here, you have the high volume dots, those are those blue dots right there. You can also see the high volume right here and here. This was a pretty obvious entry for a short squeeze. Now, once you came up and you got the big wick, that's usually a disaster. Whenever you're kind of at the top of the media hype, you have a huge wick, boom, you break the low of the previous candle. That is a major sell signal, and very sadly, those guys on Wall Street Bets continue to hold. Now, if they would have gotten out here or here, that would have been fine, but obviously not at this point. Now, I sat by, watched that happen, and then guess what? Another one came along. Another one called Tilray. And of course, this one started picking up on Wall Street Bets as well. Now, I'll start off by saying, I trade all kinds of short squeezes, I trade all kinds of everything, and I do not get trade ideas from Wall Street bets. But part of the reason why the short squeeze works is because of the hype around it and because of the massive buying. And so it's kind of one of those things where it's like, well, it already had the recipe for a short squeeze, right? It's a weed stock. Marijuana is really hot right now because we've had a political change going on. The policies are just going to be a little bit more conducive for the weed stocks, and they have a lot of high short interest. So I look at Tilray and I think immediately like, man, I miss GameStop, and this is what I do. I trade the short squeeze all the time, same pattern, setting up again. I got this one. Now the biggest mistake that I made in this one was way too much size. Now I normally don't ever, risk too much per trade because, I made my entire career on taking small accounts and growing them. So in order to do that, you can't risk a lot per position. But at this point, I had grown my account a pretty significant amount, and so I thought, well, now is my shot. That was also where I went very wrong. So what happened was, right about in here, we had a situation where this was starting to get picked up in the media. And everybody's like, oh, Tilray short squeeze is next, and Wall Street Bets was laughing about the hedge funds that were going to lose all their money. And this candle just looked like a perfect entry to me. Now, if you go back in time, it's easy to see now it wasn't. But if you go back in time, I'll show you what I was looking at. Okay. So you basically had something that had continued to trade higher almost day after day. Obviously, this is consolidation. But every time, you see how it broke to a new high. You see those bright green candles. You also have that volume dot on there. That is really showing that buyers or short covering is buyers or people who are covering their shorts are coming in right on the highs. Whenever there's a gap up like that, that really goes against short sellers. I mean, can you imagine if you're short and the thing gaps up like 20%? And that's not fun. So that's usually when they start covering. Well, then it happened yet again. Okay? So I was looking at this on this day right here, and I finally healed from COVID. I had like 3 weeks where it was basically completely useless. And I came back at this point and I said, oh my gosh, the short sellers, they have to cover. They have to. It's gone from $17 to almost $70 over the span of a week. They got it covered. So, of course, what I ended up doing was getting long basically at the dead high. Now, normally when I trade a short squeeze, that is what I do because when it's going out on high volume with this gorgeous wick on the bottom, usually it will gap up. Now, in this instance, what actually ended up happening was pretty terrible. So, the next day, and I think we should go back and we should look at the after hours data because I think it was pretty telling. Let's go back to that day. It was very sad. It was not a good way to come back into trading after having COVID, let me tell you that much. So here, let's put on the after hours data so you can really see what happened here. Because what I think happened is I think those funds said, you know what, we're not going to let these Wall Street Bets people make a fool of us like they did to Melvin Capital. And what we're going to do is we are going to show them who's boss. So this is where I got long, right in here. And I was sitting here and I was watching it after hours. And, traded from 60 to 77. And I was like, yes, I'm so glad that I put big size on this trade. This is going to be awesome. I wish I would have put even more. Well, then something terrible happened. I woke up the next day. And this is the good and the bad part of options trading, okay? The good part is that you can only risk what you're willing to lose. You can only risk the amount that you paid. It can never be worse than that, all right? Not so really with stock anyways. I mean, I guess you could say that it is, but, you know, especially when you're trading on margin, stuff like that, it gets very messy very quickly. So, you know, if you buy an option for $1 or $3, you know, you've spent $100 or $300, you're never going to lose more than that. Well, when you buy, you know, a couple hundred shares of Tilray at $60, and then the next day it opens up at 40, that's a pretty substantial move. So basically what ended up happening was it traded higher in the after-hours session. I'm going to blame one of my friends who started high-fiving about it. We always joke that, you know, anytime you high-five about a trade, it's basically the kiss of death. So he sent out a high-five tweet right around here, and then after that, it was done. So in the pre-market session, which was actually when this giant hailstorm started in Texas. Well, not hailstorm, but snowstorm. This was the beginning of the downfall, okay? It gaps down. And, you know, I'm watching these candles, these high volume selling candles. I'm like, who is selling now? It can't be retail traders, I don't think. It's got to be the funds that are just pushing it back down because they don't want to be made a fool, right? So then what happened is Tilray opened up, was trading, you know, it wasn't that bad at first. It was trading around 55 or so, but it just fell like a rock. I mean, this candle right here, this wide range expansion candle with the dot, bright red, the arrow right here, that's telling you that you were done for. So I held it for about 2 hours, and I thought, all right, well, let's see if it'll bounce a little bit off the open. Let's see if it will. Well, let me tell you, it didn't. So my shares of stock that I had gotten in for, they were around, I mean, I had a bunch of different entries around here, anywhere between 60 and 65 or so about. Then you have it open up overnight, basically 50% move. I mean, it's just massive. It just basically obliterated all of my options. My stock price was looking pretty awful. And I just sat here watching these candles just go down and down and down. And I thought to myself, well, there's a couple really important lessons in here. And I need to make sure that I add this into a chapter in my book because, well, there's a couple things. FOMO is number one of the most destructive emotions when it comes to trading. What I should have done is I should have recognized that because I was so annoyed that I missed the GameStop move, I went ahead and doubled up on Tilray. So there's number one mistake. Number two mistake was GameStop was a freak anomaly, okay? I make my money in the options market making regular trades, you know, being a bricklayer, looking for the same setups that are repeatable over and over and over again. GameStop was a complete freak move, and expecting that hedge funds and the market was going to let that happen again was completely disastrously wrong. Okay? I should have known that. If my emotions weren't taking advantage of me, I would have realized there's no way they're going to let that happen again. Okay? So that was really stupid. Then the third part was just risk. So I ended up risking a little bit more than I should have. I did end up taking about a 5% hit on my account that day. Now, you might think that's bad. I mean, it definitely was bad. For sure, it was bad. Could have been a lot worse. You know, there's traders that will risk 20, 30, 40% of their accounts. You're never going to find me doing that. Typically on a trade, I'll risk anywhere from 1 to 5%. So taking a 5% overall hit was pretty rancid, but it definitely could have been worse. So anyways, after this disastrous move in Tilray, I decided to clear my mind and clear out my positions. So I had a position in MJ, and also, what was the other one that I had? CGC, and Tilray. And I just closed out all of them. And I was like, got to get my head back in the game before I can make some more trades. So, usually when you have an event that just kind of rocks you a little bit, the best thing that you can do is not make any further trades. You really don't want to compound the issue by saying, oh my gosh, I just lost 5% of my account overnight on Tilray, so now let me go buy Tesla or whatever the case may be. You want to make sure that you're getting into trades because they have a good setup, because they have a high probability setup, and because it's something you want to trade, not because you have FOMO or you're trying to make back what you lost on another trade. So really what you have to do is you just have to analyze it, look back at it. Probably it's a little bit better when the wounds aren't as wide open, but just like I did here today, and explain, what went wrong and how to avoid doing it in the future. So the next time there's some crazy Reddit hype on some other stock and it's up 20% in a day, you're not going to find me buying it. So I made this video because, well, that's what I do. Share my experiences for better or for worse. In this example, it was one of the worst. So if you had a trade that you can remember as one of the worst trades you have ever had, let me know in the comments. But more importantly, let me know what you're going to do in the future to avoid making that same mistake. All right, well, that's about enough for me, so I will see you in the next one.